That was not nice. Sarah muted me.
Oh, well. Oh, that was
Sorry, I was trying to rename myself.
Thank you. That was awesome. You made my day. Now,
Alrighty.
what happened in Washington? Anything?
Shut the government down, I think.
Yeah.
But can tell by the market so far. You know, Jack, profits and performance shown today are not typical. We'll discuss all sorts of stuff, and we make no future earnings claims. You might lose money doing the stuff we do. We're going to show you off a system later on today that has a 74% win rate on 3,500 trades. That's a lot. And the average hold time is less than 24 hours, many times less than an hour. And what you're going to see today, internal audit that took those real live issue trades and put a set of option criteria to them, meaning that there's some hypothetical wins that we're going to discuss. And they have the benefit of hindsight. Maybe you can do better. Maybe you can't. No guarantees on future results. So let's be real. When you take trades, you might lose money. And when you do this thing we do, we try to give you an edge. That's what Jack and I are here every day for. Try to give you an edge in the markets, help you make money. Can't handle losing money. Sometimes it happens. And we've got one to discuss today, Jack. One went against me, but not worried, but we'll walk through it. Walk through it. So you might lose money doing this thing we go do called trading. Let me pull it up here. I should have pulled it up for you. Look at that.
Give me the background here. What happened?
So this is Docu. You know, I've been selling. I sold puts against it at 79 and got put back here in July. And been selling upside calls. I had an 84 sold for this week. You know, it's been above that, and I had an 84 sold for this week. Yesterday, it dropped $10. Ouch. Some people got worried. Got lots of messages about, oh my God, you know, hair on fire, chicken little, sky is falling. I got 300 shares, $10 drop. That was $3,000. Like, I know it was down. You know, somebody was like, what happened with Docu? I was like, it dropped $10. That's, you know, the why insignificant. Now, you know, the story, according to social media, OpenAI yesterday announced they were going to compete with Docu as far as having the ability to sign and authenticate signature documents. I mean, that's kind of the primary business of DocuSign.
Let me just pause right here and ask you, how big of a loss is this for you relative to other losses? Like, is it your biggest?
I mean, so rewind 2 days ago, I was up 50 grand. And then yesterday, I was down 3 grand for this.
Okay.
So to me, I mean, and I'm break even on the trade at this point. Like, I'm not underwater. Like, it just sucked the profit out of the trade. So I'm back to scratch for now. Yeah, I'm up here at 79, but I've sold premium upside calls and, you know, puts before that. And my cost basis is sitting right here at like 73, 72, 72, 73, right in there.
I think you're good. This drop to me looks like an overreaction.
Yeah. I mean, I'm not worried about it, but I thought we should talk about it because I know some people would be in this trade and be worried about it. But look at this. We were right down here after I got put the shares in August. We were lower than this right there. I'm not really concerned. I wasn't concerned over here. I'm still not concerned over here. You know, does it kind of suck that it made a lower high and dropped off? Yeah. I was hoping we were done with this crap, but you know, hey, right back down here again. Could we go lower? Absolutely. Right down there is the support for right now. But it's got juicy premium, and I just keep selling it. And I actually rolled down yesterday, booked out the profit on the 84, and I rolled it down to a 79. But there, I mean, I made $300 on that call in a week. Not bad.
Not bad at all.
So I have to wait.
This will have
You know, that was a, you know, the beta greater than S&P at 1.3. So
little
we'll just
tiny
see.
market cap, you know, they could be bought out rather than compete with them.
Oh, yeah. I mean, OpenAI is going to spend like $300 billion. I mean, this would be a drop in the bucket just to buy their technology and integrate it. You buy the whole company.
I'm really surprised we haven't seen more buyouts this year. You'd think we'd have with all the AI and the people that had what everybody else wants, you'd think there'd be a lot of buyouts
Yeah.
like Tell, I could name a bunch of them, Texas Instruments.
Yeah, you'd think there'd be some mergers and acquisitions going on, but I don't know. So far, not. So
Yeah,
far, not.
yeah, and I think the IPO market is going to take a recheck after Firefly got their investigation put on them right after they go public. That could be a real bad scare for IPOs.
Maybe, maybe not. We'll see. The IPO market was really dry for a while, and now it's starting to ramp up a little bit. So, um, I don't know. Most 95% IPOs start out kind of bearish anyway. So, um, I,
It's a good sign, though, when you have IPOs coming to market. It's a sign of a healthy market, healthy Wall Street.
yeah, it's kind of healthy, and IPOs pulling back is kind of healthy too, because that means the company got a good deal, as you say. When it pulls back to a lower price before it kind of finds a floor. So,
And then
and
they got to prove it from there. So we'll see, like Circle Internet, CoreWeave, a couple of these companies are still in the prove it to me stage.
and the jockeys are unproven,
The
as you
jockeys,
say.
yeah. I'm long this, not way less than my normal. So I'm long this too. I want to get a handle on them both and trade them.
I was kind of bearish with you earlier this week when we talked about it, but there is a bull case. If we actually do some bullish things here and break out, this could actually go on quite the run.
It could. They have a lot to prove, and they have a lot of people to prove wrong because there's a lot of negative articles and information out here about that. Not that it might not be true. It's just negative stuff about their financials and customers and how they operate their business. But we'll see.
And right now, it's stuck in between these kind of layers, and until we get up or down, I'm not sure.
Yep.
This is a potential, since it was an IPO, a potential to be bearish and come down and make a lower low. But the internal structure here, this price action, maybe it's one of the 5% that bucks the trend
I think
and actually
that
goes higher.
the underlying story, I think will be better than people expect.
And we can pop over here and check it out and see how they're doing. Tether up here, their main competitor. And then USDC hanging out here, number 7, with a almost $74 billion of market cap for their underlying coin that they manage right there. So that's basically $74 billion of money that they have to buy treasuries with and earn interest.
Yeah, not a bad gig.
Gee, make me borrow $74 billion from the US government and collect, monthly interest.
Yeah. Basically paying them to buy T-bills, right? Giving them free.
And it's funny because anybody that wants USDC, they bring their US dollars to Circle. They give I'm like, hey, here's my $10. They go, here's your $10 of digital make-believe money, and they take your $10 and buy treasury with it and make interest, and they are not allowed to pay you interest.
Free interest. And there's a great article out there by Anthony Pompliano. What's that other stable coin?
Tether?
Why, I think it's Tether. Yeah, why Tether may be the best business in the world. And it's just that people are buying it and they don't have any employees. They're making, $100 million per employee. But with Circle, it's more than just the stable coin. I think they're going to get into a lot of tokenization. They're talking about you can buy tokens of stocks that would be like a proxy for a share of stock.
Yeah.
Stuff. So we'll see how that goes. But I think the story is going to be a little bit broader than just being in the stablecoin business for Circle Internet.
And just to go from here up to here, that's $100 billion more in assets under management.
Oh,
making, what, 4% a month? I mean, 4% return annualized, getting paid monthly. I
but
mean,
this is going to do something to the treasury market. I don't know what, but you know, it's linked all to treasuries, and that for folks, if you don't know, that's the risk-free rate of money, a T-bill. So if it's 4.26 or whatever, that's your risk-free rate of money. But there's such a demand for these things, you would think maybe that the yield, might go up.
yeah, that's kind of interesting. The more demand you have in treasury market, though, the lower the prices go. It's kind of a reverse auction
Yeah,
thing than
yeah,
most
but
people think.
you have it here where they have to buy it, right?
Yeah.
So this is different. The Chinese don't have to buy it, so that's why those bond prices move like that relative to yields. Yield goes up, right? Value of the bond
Yep.
loan is less. So
So I kind of speculated that the US government knew what they were doing and created a forced buyer of treasuries
yeah,
by requiring these stablecoin companies to have to buy treasuries
yeah,
as their backstop. And 95% of all of these stablecoins that are available, and the large, these two represents like 75% of it. 95% of all of them are denominated in US dollars. So that's 95% of the stablecoin market. And this is two actions. It's one, creating a forced buyer, but it's also digging the moat around the US dollar as the world reserve currency.
yeah. Very interesting how this is going to play out. And there'll be more applications that Circle Internet is going to roll out for tokenization. So we'll see how that goes. But it's in CoreWeave, that's a different animal right there.
Yeah,
But
CoreWeave is playing in AI realm, but this is Circle. And once it finishes this little move down, it looks like it has one more little
yeah,
move to go. Then we'll probably do a retrace. And if we can actually buck out of that retrace, it looks like we got one more dip to go, and then potential a retrace, and then we'll test this area right here. If we break through, going higher, but if we reject, we may come back lower again. And it
well,
may take another quarter or so before we can figure out how this jockey is going to perform.
it is. The naked put here is a good play for me though too. I'm long some stock that I just straight up bought twice, and I want to build a position. I'm gonna lay out some puts here in the next couple of weeks to see what happens.
All right, everybody. If you're brand new, let us know in the chat. We can explain any concepts. If we say anything you don't know what it means, please ask questions. We do this for you, not for us. We don't get anything by coming here and talking. We're trying to come and help you make money in the markets. So you got to ask questions and we will stop and address them. So
Yeah,
right
Dave
there.
will take on Telegram, sure. Well,
And I can give you the links for Market Masters. It's the same link every day. Doesn't change. Right here, you can even sign up for an SMS reminder and watch the replays all right here. So Market Masters, that'll get you in the show. First link, second link down, get you the replays. And the third link down will sign you up for an SMS reminder every time Jack and I are going live for Market Masters.
every day, 11:30.
Right
Hey,
there.
let's take a quick peek at Lockheed Martin.
All
I've
right.
been, I've been, I'm long it, and I don't like it. But look at this.
That is one heck of a trend right there.
I'm saying, I look at this morning. It's up again. It's just like, I was not going to throw in the towel because it's in my dividend portfolio, but this has been a real disappointment. The dividend is safe and all that. It's well and good, but I want to get some price appreciation in addition to the dividend and the dividend increases and things like that. And this has just been a kind of a disappointment going down, gap down back there by the L, you know, way back there. Yeah.
Yeah, gap down here, and then we gap
And
down
It,
again when we got back up
it
in there.
never really bounced back there by the L. It went down lower, down to the left part of the M. And then it finally
Yeah.
rallied, and then it went back down. You could just see it, and then a gap down. And man, people were just so negative on this thing. And now That little move right there is nice. I wish it wasn't as aggressive as it is, that little last piece of trend, because that's too steep, uh, to be sustainable. But I love that little price action right there.
You know, that to me, when I see this price action like this, it looks like program buying
Yes,
of some sort. It
yes,
looks like some sort of algorithm
yeah,
accumulating
yeah,
on a climb
but
schedule.
not chasing, right? Not
Yeah,
chasing.
it's very like anytime it gets over the skis, it takes a break, slows down. It just looks like somebody's accumulating a very large position here.
Yeah, yeah, they are. I wonder if there's been any unusual options flow on this thing.
Yeah, I don't have access to Lance's thing like his nice clean thing. I have a different kind of options flow scanner I can pull up
Look at
really
that. Oh,
quickly.
that is just a crazy looking move right there.
There, yeah, I was looking back. There's no other price action like this, so this is unique.
Extremely.
Like Lockheed Martin doesn't move like that. When you come back here, there's a little piece right there, but not anything this size or length,
No,
duration.
no, nothing like that. I've rarely seen that. Yeah, Dennis says parabolic. It's almost parabolic. That's why I say if the angle was a little less slopey, not as steep, uh,
Well, it's not. I mean, it's not quite parabolic because we can put a line on it and it follows the line pretty darn tight.
yeah,
Whereas a parabolic is more like,
straight up.
um, put my click. The alert popped up over the parabolic is more like this,
The curve in
where
it.
we start and we go vertical. So
That is crazy. We'll have to see how this plays out. Sure looks funny to me. Not normal.
yeah, it's running in a channel and it's very tight price action. It's kind of weird. And let me see if I can pull up one of my other tools that we could try to find some unusual options here.
James has a question. Can you help me explain how to roll a covered call in cases where the strike price on the call you sell runs and the stock runs past what you wrote it at expiration? James, the only thing you can do is buy back that call, take a loss on it, and then sell one at a higher strike price further out in expiration. Or if you're going to get called out where you are now, just look at the profit on it, if there is one, and see if you're good with that. And you can always get back in after you get called out.
Yeah, so
Can you say why the drops are always harder than the gains in any stocks? Yeah, stocks drop faster than they go up. When they drop, it's like, throwing out a 20-story window when they piano throwing out a 20-story window. When they go up, it's like walking upstairs. And that's mostly emotion, fear. When you see a stock dropping down, that fear is the strongest. So that's why the drops are severe and why they're so fast.
now suppose you had a 21 strike sold against TSLL shares and you were going to have to buy it back $1.49. Now you could fly out to any other expiration you wanted to and look for something, to just go to scratch. You could go out a week and get 22. You could go out a couple weeks and you could be able to move up for even roughly 23, 24. But if you're, trying to move up significantly back out of the money, it could cost you some money to do this if you were going to roll. And it's just buying the 21 for this Friday, selling out in time. Now, the further you go out in time, well, got to do it manually because I don't have these actual options, so it won't tie it to the chart. But you could fly out even further in time and get up further. Oops, I bought instead of sold. And you could actually get credit going out to 30 and going out in time 51 days. So it's a matter of time and price to get back out of the money. Now, stuff with lower beta, TSLL has one of the highest betas I know of. Stuff with lower beta, it's tougher. You're gonna have to go much further out in time to be able to come up out of being in the money. So usually it's better to try to manage the short call before it goes in the money or when it's right at the money than it is if it goes several strikes in the money. Usually your options get very limited on what you're going to be able to do. And Jack, do you have anything to add to that?
No, that's good. That's right on.
So I just thought I'd demonstrate right here with this one, since I know it's a high beta, but something that's lower beta, closer to 1 or even below 1, it gets very difficult to roll for more credit. And as Jack said, your option is basically to buy the one that's in the money if you want to still catch upside on your shares.
Yeah, it's covered calls. Sometimes you don't want to rush in and buy it back. For example, I sold the 250 Goog call when the stock was much lower, and it's gone over 250. I never got called out. If you were to panic and want to buy that back because you don't want to get called out at 250, you would have kind of made a bad move there because the Goog pulled way back from 250. So that's one of the reasons I don't. I just let it roll. If I get called out, I get called out.
Let's see. We got, there's several $1 million orders going through on Lockheed Martin. And
In
just
the money,
today,
James, is a call that is lower than the market price. The strike price is lower than the market price. That's in the money. At the money is even with the market price.
yeah,
That's
at the money.
strike that is at the market, currently matching the market price of the stock. That's at the money. In the money is anything lower.
And, just showing it off on Lockheed Martin here. Let the pop up the options chain. And not all option chain are exactly the same. Like the one on TradingView here, the strikes are high here and they go down. On my trading platform I keep pulling up, they're high on the bottom and low toward the top. So they go up as you go down the page. So you have to be careful. They're not always the same. Like on TradingView here, they're opposite. They go start high and go low. So when you come down here, at the money usually has some sort of line on the chart or line on the table. And right here, we've got the price that is currently trading at, and it kind of draws it where at the money is. Now, these ones that are above for calls are out of the money. These ones that are below for calls are in the money. That changes on the put side. These ones that are above on the put side are in the money. And these ones that are out lower than the current price on the put side are out of the money. ITM, OTM. And they kind of, there's a cross hatching on this chart for the in the monies on this particular one. On, grab the wrong window. On this one, it shows you a little bitty ITM on both sides and points. Like these are in the money, these are in the money. I can't draw on this one, but so hopefully that helps you understand options lingo a little bit right there.
Yeah. How about I'm loving IBIT. The more I look at this thing, the more I think you're right about a rip over 70.
Yeah, on TradingView here, I can flip it to ascending or descending. I just was using the default. So I may flip it back because that's the way I'm used to looking at it. Yeah, IBIT. We'll jump back over there. And yeah, hopefully, maybe we get that rip I've been looking for.
A little stronger here than I kind of thought it would be. So
I did sell I bought back my 64 or yeah, my 6. Well, I bought back my 66 yesterday and resold this Friday for 66. Collected almost another $1. It was crazy. And maybe I get called out. I have a 62.50 put sold down here. I have that 66 call sold against the shares I took at 64.50. My cost basis is down here at 59. If I get called out for 66, darn, I just forcibly took $7 profit.
Yeah, but you're gonna have to get back in, or you'd want to get right back in if you got called out.
Well, I mean,
I got the,
I've made a lot of money here, and I've got other opportunities that I might, deploy the cash to. So we'll
I
see what happens.
I got the 63 naked put that I have not been assigned, and I got the 71 and 73 calls that I've sold long on the other stock that I have. If I get called out at 71 or 73, I'd get right back in.
Cool. And ETHA. This one been running pretty rich also. Yeah, I've been selling at 33, had rolled it forward, got paid another dollar or so. This one might actually end up here. I might be able to roll it again for another dollar. It's just the craziest darn thing right here, this stock.
Yeah, it is. There's so many great opportunities out there right now, and we don't need the broad market to go higher. What we're doing here, folks, is just taking advantage of cash flow, making cash flow out of the stock market, sometimes not even touching a share of the stock. And that's always going to be out there. The volatility is always going to be there. We don't need a bull market. It can do anything, and we can still do this. You're kind of free from having to worry about stuff when if you know how to make money selling options, that's one of the greatest skills in the world. And it's out there all the time in any market condition.
Yeah, Jack, I thought we'd talk about this too. I had sold the 18s. These were basically at the money when I sold them for this Friday a couple days ago. Maybe I think it was last Thursday, maybe when I sold these 18s. They were, almost $1 a piece. Now they're down to 6 cents. So right before we came live, I actually rolled that out, went up 2 strikes to 20, got paid another 59 cents for extending that out for a few more days. Went from 2 days to expiration to 9 days to expiration, added 7 days to my time, got paid another 60 cents. Still way out of the money. So I'm only at 20 right here. And the money's up here at 22. Just
Yeah,
insane money right here, right now on Tesla.
Tesla's still looking like it wants to break loose and go higher.
It does. And I mean, today it's moving
Yep.
up pretty good too. We got a 2% move right
That's
there.
neat. And yeah, 454. Look, this looks like it's gonna go.
And my position that I bought last Thursday finally closed out for the profit. Right there. 0 position size 0 now. So I just booked that one out a minute ago while we were talking. Let's see if I can find it right here.
Tell the good folks, how do you roll it? We got the question.
Yeah, how do you, I mean, I just showed y'all how to roll a minute ago on calls. Let me
Yeah,
pop
you
this up
gotta
again.
close out the first option you have, administrator. You got to close out the one that you sold it. When it's down, you got to buy to close, then you sell another one. That's rolling it out at a higher
So if I
strike.
wanted to roll right now, I would this is why I use Trade Trade. Right now, you come down here and you do roll, you can roll expiration or you can roll strikes. So if you wanted to roll expirations, just to go, this will create the order for you. You're buying to close the one you got, which is the 20 strike for October 10th, and then you would sell the new one. This is rolling puts in particular. This is rolling short puts. 39 cents credit to go out one more week, which I just got paid 60 cents to come out 7 days. So that's not a great deal at this point to go out another 7 days. The IV on this thing, the IV curve, this is one thing that Jack probably didn't look at much, but I pay attention to, is where the most premium is. And the most premium's right there 1 week out. Kind of dips 2 weeks out. That's why you don't get paid as much. So
And
that's why I keep playing this one 1 week out. Keep playing 1 week on, 1 week out. Yeah, the month looks pretty good too. But for some reason, the 2 week out, not nearly doesn't pay as well right there.
so crazy. And that's really a good thing to look at. I don't look at that just because I want to keep it simple and do it monthly, but you could make more doing it weekly. It all depends on how they're priced like that.
So, and then I see the question.
He says, why do you prefer to do it on a weekly basis instead of monthly. Well, you can really tell on a stock if you look at a weekly option, what that is worth, and then look at the price of if you did it a month out. You can just compare. Does the weekly doing that 4 times add up to more than the monthly? If that's the case, then you'd want to do weeklies. If not, then you'd want to do monthlies. If you really want to split hairs like that, you're probably making more doing the weeklies.
Oh man, I'm for the majority, I'm usually taking advantage. I'm locked into it for a much shorter period of time too. I'm an active trader. I like to move around. Things change pretty quickly in this market. I don't like to be pinned down for a month. Now, if you're out there fishing in the afternoons and riding bikes on the trails like Jack is, and you don't want to sweat, you don't want to sit here and watch it and manage it, play the monthly. That's available. You could play the yearly if you wanted to. If you just wanted to manage this stuff once a year, play the yearly. I
Yeah.
mean, that's
I do weeklies though. I do credit spreads every week. I put that on Tuesday for the following Friday's expiration. Now, I would
yeah,
not ever do a credit spread for a month. No way in a billion years would I take a credit spread on and be tied down like Jeffrey says for a month. But if I do it for the week, I'm in a good position because just this is something you should know is time decay kicks in the most in the last week of expiration, right? If you really want to let time decay do all the work for you like I do, you want to focus on that last week of expiration. So when I was doing credit spreads in my fund back in the day, there was only monthlies. So we could do this for 1 week based on the third week of the month. We'd get in on the second week and then we only had a week till expiration, but we can only do it once a month. Now with weeklies out there, you could take a weekly option every single week. I could do it 4 times as much now. So I'm right in the sweet spot of time decay. I start off out of the money on a stock that's trending higher, and preferably it's going to trend in the next 3 days, continue to trend away from my strikes. But man, by Friday, time decay starts to chew on that thing like a dog on a bone.
I see time decay, theta decay. That's the extrinsic value of an option. That's the out of the moneyness of an option. The value that's not in the money of that option. So all the out of the monies follow this same exponential decay. And right around a month to expire, it starts really accelerating. And then it's exponential. So when you're 2 weeks out, it's twice as fast. And then when you're 1 week out, it's twice as fast. And when you're a couple days out, it's even faster.
Yeah.
And, and
Yeah.
so those last couple of days are, straight down on the decay.
Yeah. I tell you, I think I told the story when I did my first covered call with not a covered call, another straight up call I bought with another guy when we were at Dean Witter, and I lost all the money, shouldn't have lost and everything. And bad story there. But what really killed me was watching this thing. Even on days the stock would go up, in that last week of expiration, the option would still go down. And it was just,
Yeah.
we were on for a whole month. But that last week just absolutely positively blew my mind how fast that thing went to zero. The minimum commission back in 80, I don't know when that was, 85, that was like $250 minimum. And our position wasn't even worth $250. By the time I was crying about it, yeah, that got me thinking, who took this other side? That looks like it's a lot better deal.
I have no hard and fast rules, administrator. There's no, it's always, to me, it's about the opportunity. There's mispricings that I take advantage of in options, and it gets a lot more complicated. Now, other people keep it simple. It's just for me. I found that if I'm going to buy a call, I usually go look for the cheapest one to take advantage of the move. Like we were talking about UVXY yesterday, and I jumped through all different expirations and different opportunities and explained it. It hadn't moved. It's decaying. Like that's, straight up, it's, losing money right there because it's not moving. And I'm down 9% on that position right now. We haven't even really moved. If you look at it, we popped this morning and then we're right back down. Those two candles are almost the same, but it's already lost 10%. That's time decay working against you. I'm only out to October 24th. I bought straight calls October 24th. In case anybody wasn't here yesterday, didn't hear the conversation. You can watch the replay from yesterday. I went and picked up 14 strike UVXY to take advantage of a potential pop in VIX that may not be related to the government shutdown. It could be something else. Right now, government shutdown not really caused any chaos. There may be something else because a couple days ago, I saw a large order go through on VIX. We can pull this back up and go through it again today.
Massive.
Right here on the 32 strike. It's like, how did you find this stuff? I have all sorts of tools, but right here, there were 150,000 contracts traded on this option. Right here. To me, that's a red flag. I made about a third of the $1 million I made in the month of COVID in March 2020 trading VIX. This caught my attention. This is a $12 million candle right here. Somebody bought $12 million right there on that candle. It wasn't the big down red spike. It was the next green bar is where that order flew. 142,000 for that one, and then they picked up a few other. There were two big block orders. This 142,000 and another chunk, basically worth $12 million. That caught my attention. Now, I did the numbers on UVXY, and this November expiration is ridiculous. Like they have, you can see the term structure here, completely different than TSLL. The longer you play, the more you pay. Now, that doesn't make sense. Like, so the longer you play, the more decay you're going to buy. So I came in just 1 month. I figured out, look at the 14 on UVXY. The call right here. That's more than twice as much to add a month. So I can play the 24th, and if this expires for nothing, I paid it for 50 cents. If it expires for nothing, I can play again 1 month out and be cheaper than if I bought 2 months to start with. So that's the thing you got to be careful of. There's no universal to it. Every single instrument has a different IV term structure. This is where a lot of, I think, options traders get burned in options, going long options, because there's no universal rule. You can't take the way Tesla moves and the way Tesla's priced and apply it to VIX. You can't take that and apply it to Apple.
No.
It's going to be completely different.
Even Tesla and NVIDIA are completely different. You
see, Apple looks completely different here. And then even a volatile thing like NVIDIA. We'll go look at that one. The term structure.
That bad boy right there is about to pop.
This one looks all different.
In this thing.
And there's no universal IV pricing.
And there's no reason why, really, other than the market makers reflect the market price like that. Strange.
Well, the why is usually surrounded by the traders that trade that ticker, the options volumes that trade that ticker, and then the known unknown events, as I call them. We know that earnings are coming up at certain times, and they create unknown reactions. So those are known unknowns. But then also priced in here is unknown unknowns, things that could happen that we don't know about. The CEO getting caught with all the money and then all the company's money and bonds in the back of the car and 2 dead girls in the back seat. I mean, whether it's a guy CEO or girl CEO, doesn't matter. I mean, that kind of thing gets somebody in trouble. Filing bankruptcy, usually what's coming, but sometimes like Enron, it just happens.
Yeah. And this is subject to, we cannot sell chips to China. Then the next day we can. Then the next day we can't. Then the next day we can. Very, very uncertain times for NVIDIA.
So this is one reason I say that buying options is way more difficult than a lot of people make it out to be, because there's things that a lot of traders just gloss over this. A lot of gurus gloss over this, and Like like Meta right here, IV term structure, once you're past 3 months out, it's pretty flat. But that's not like, this is not universal. And there, usually you see a big spike that tells you when the earnings, the next earnings is priced into the options. Usually you see a big spike in that term structure. So this is I don't know. Maybe this is helpful. Maybe it's not. You can let us know in the chat. But
Well, it
this
really
is,
is. If you're a seller, you want to find that high point. If you're a buyer, you'd want to find the low point.
yeah. If you're selling puts on Meta
Month
in
out is
particular, this is the only real place to play.
1 month out. You see there at the bottom. That's
Yeah. 1 ILM is 1 month. 1 week, you're not going to get nearly what you get. And then also another thing is the scale is not always the same. Right here, they're not pricing in a lot of volatility.
Oh, not none.
Compared.
Really.
That's not really any volatility priced into that one compared
6
to
months. 6 months to next 6 months out.
compared to this baby. It's got 124% priced in just for a week. 122%. So there you go. How many shares? I have no idea how many shares I have in TSLL. Thousands. It is in the thousands. How many exactly? I don't know. I have 20 something accounts that I manage for my family. And
That your largest position?
what was the question?
That largest position?
No, it is not my largest position. My
What-
largest position is this right here. Mara Holdings.
Oh, no kidding.
I have a very large bet that I've built over the last 5 years on this popping to, ideally, it's going to make me $1 million if it pops to triple digits. Realistically, it's probably only going to pop to 35.
$1 million net profit?
Yeah, $1 million profit. If I get to triple digits, which it's not too crazy when you look at the chart here. That's just new all-time high.
That'd be nice to have a net profit of $1 million off one position. I'm close on Nvidia, but not
And that
quite.
was my goal when I started building this back here. I think my lowest cost early was $8. So I started building it right here. My longest holding was in at $8. I have a lot. I accumulated $11. And then a lot more I accumulated back here on this job. And more here and more here. And I've sold out on peaks, book calls, traded around it. My cost basis, I have no idea what the real cost basis across the whole position is. But with what I have open and the difference between where we are right now at 18, or this was actually, I was doing the calculation at 12 to 100. That move right there will net me $1 million profit across my holding of this stock.
Nice.
I believe it'll happen. I believe it's possible, but I'm also willing to bail at 35 if that shows that we're going to top out right there in the price section. So anybody that thinks I don't look at this daily, when you have that much exposure to something, I look at it every single day. I don't like to talk about it every day, but
Yeah,
it just gets,
I'm the same with Nvidia. I'm close to having a net mill out of it, and I do look at it quite a bit, and I trade it all over the place.
And somebody asked why I believe that. It's this chart right here, non-log mode. This move up, this retrace, that move up would put us right at 102. Right there. It's just a fib proportion. Now, may not play out. It could do the GME thing. We make another lower high and lower high and lower high, and it just fades away. It's possible. But it just has internal structure, pullbacks that fit my technical pattern. pull this in just a little bit. Let me turn off the algorithm that's showing up all over the place. Put this on a weekly chart. This move right here, this low right here to this high right here, that was a 6.8. That potentially puts that up to 600, but it probably won't play out in this cycle. That's crazy. That's long term. That's probably like, out here in the 2030s or 40s that we would get up there. Looking at it again, this move up, this retrace hit a 50%. That's actually much more bullish to do a shallow retrace. And that extension puts us right up here to a new high, 82 to 150 as the target if it can play out. We got to break through and get running. And then we probably pull back again. That next pullback be a higher low, somewhere in this vicinity, probably around $10 again before we run again, if we're going to run. Now, this company could just go out of business. It's possible. They're all possible. So I'm not trying to convince anybody to buy this. I got in starting a long time ago. My cost basis is down kind of in the single digits. So
yeah, it takes a while, folks, to make $1 million on one stock. That is a fact. I've been in NVIDIA for years now, and I'm still not. I'm close, but not there.
all right. No, Mora is an interesting company. They mine Bitcoin. They own power plants. They actually own complete power plants. They mine Bitcoin, and they're the number 2 treasury company behind MSTR, behind strategy. They kind of have, several things going on. And they have 52,000 Bitcoins. And right now if their net liquidated value, if you took their shares and looked at the value of the company, $7 billion, their Bitcoin right now is worth more than their market cap.
That's a small market cap too. Anybody wanted to chunk Bitcoin, they could take this company, right? Just
Yeah, you could just buy out Mara and obtain their Bitcoin.
I'm saying, be an amazing move for somebody. Yeah, there's a lot of buyout stuff out there. Boy, if I was in that game, there's a lot of targets I would put out there.
So, why am I in that? I'm just because I believe in the potential here, but I'm willing to bail on it if it sucks it up and doesn't break out through this high again. If we reject this area one more time, I might bail on it and move on. Be a bummer, but it'll just be the way it is. All right. Any other questions about that? So, and why not Riot? Why not this? Why not that? I mean, pick my horse, pick my jockey. I listened to the CEO talk. I like a lot of what he says. I believe in what they're trying to do. At some point you gotta pick your one and go for it.
Yeah, that's right. And go all in. Yeah. I was just reading a book about sometimes you got to go for the jugular, these investors. And I was thinking about that when I took my position. I thought, man, if I'm going to make a serious move economically for myself financially, I got to place a better bet. Yeah. Dance with who brung you. So I pushed
right now. I believe in TSLO right now too, because of this pattern setting up. Same sort of pattern, same sort of thing. 54 upside is in the chart. Now, leveraged instruments don't always follow the patterns. That's the caveat here. But the underlying Tesla has a same sort of crazy potential going on right now.
Yeah, something's cooking.
So I tend to wait a long time. And then when I find one that I really believe in and really see it, I pound the crap out of it, trying to make the money while I can. For lack of a better way to put it. BITO so before there were Bitcoin ETFs, this was the only game in town for a way to play options. What they do, you have to understand what this fund does. If you go read the prospectus, you kind of get you might want to use AI to break it down for you. But what they do is they buy futures contracts on BTC. On TradingView, that's BTC1 exclamation point. Now, there's costs to doing that. And as you can see, this looks nothing like the Bitcoin chart. This looks nothing like IBIT chart. But it pays out a crazy dividend. And right now they're paying out the NAV because they're trying to, they have written in the prospectus is how much money they expect to manage on the upper end. And it's right now people keep pouring in more money and it keeps going above. So they keep paying out the dividend at high rate to keep their, you would think they would want more money under management, but they're exceeding their money under management limits. So they keep paying out this ridiculously high dividend to try to get the money under management back down under control. And it creates an interesting opportunity on the adjusted basis. This looks like the Bitcoin chart. If we lay Bitcoin over this, come on now. Oh, I got the ETFs clicked. Lay down the all-time history over top of this, line it up. You can see they, underperforming slightly, but all the twists and turns reflected pretty closely, especially on a shorter term. The pink is Bitcoin. This is, BITO is this stock that trades the futures. We have a cost to manage the futures, and that's why it diverges just a little bit. But it's pretty darn close when you take in consideration the adjustment for the dividend. If you're trying to play options on this, you don't get a dividend. And that's the difference. Why do you hate playing options on this? Because when you play options, you don't get that crazy high dividend. And that's the performance. It's 9% versus 100%. The cost of the futures with the amount of money they're paying out on the dividend creates this large.
What's the management fee here?
Creates that large divergence there. And the management fee is pretty ridiculous too because they're trading futures. 9.95.
That's high. But somebody's got to be sitting there at the desk all day, every day, or a bunch of guys, right?
Yeah, they're constantly rolling the futures forward, rolling the futures forward every month. And that has costs. So that's the asset held here is Bitcoin futures, not Bitcoin.
Yeah. I've never traded it.
So I do hold a position on it because, funny enough, there was an interesting opportunity if you bought a 20, if Bitcoin's going to pop, if you bought a 20 strike call and sold a 24 strike call, if Bitcoin makes its big run, this thing would pay out more than if you went to IBIT and did the same thing. Even though the actual, we talk about beta being tied to the S&P, but the beta of this to Bitcoin is only, funny enough, it's 0.8. When you compare this to Bitcoin, it moves 80% essentially over its entire history. So if there's things you don't understand, you can ask AI. AI will break down a lot of this stuff for you about, they do pay a dividend. They pay a lot of dividend. And that's the big difference between this and IBIT. These guys pay a dividend and it's huge. You look at the dividend indicated 53%. So if you were going to play this, you need to be in some shares, not even selling puts. You need to be doing shares. All right. Hopefully that answers the question about BITO. I wouldn't say it's a good stock holding. It does follow Bitcoin. If you're going to hold shares at a lower cost than IBIT, maybe sell some upside calls. It does have pretty good, it's not great since the beta with the S&P is 0.6, but it does have fair, I would say fair call premium, but you can see the term structure here The longer you play out, the better you can be.
You don't want to be 3 months out. That's way too long.
And, it's not priced very high at only 40 and 50% compared to iBit. Yeah, I guess it's similar. It's actually got more premium on the lower time frames.
Did iBit hit 70 today?
I'll have to go back and look real quick. Yeah. Not yet. Still 66. 67, almost to 67. I'll sell mine for 66. I don't care. Like, now this thing can pull back tomorrow, Jack. I mean, I know.
Surprised at how strong it is today.
Yeah, this thing can pull back and then not move till next week. So be careful out there. Now, I have a technical pattern that I follow every day, Jack, and
It's
it
deadly.
plays out even on small time frames. It even plays out.
This is
Like we're
where
talking about.
this is why I want to call you Professor Turnmire, because got this technical pattern and you can see things in it that most people cannot see.
Yeah, I even play it on the smallest of the small time frames, like the 1 minute chart here. And look at this. Monday, fired off, paid out right there on Tuesday. Fired off. And you know what? Look at this. Just since July, 81% of the time it's worked out when it fires off. We do a longer look at the last year.
Wow,
Update this baby. 75, almost 75% of the time
that's good stuff.
works out. We can go entire history, pull 20 years with a report. Take it a second to update. Training views servers probably like, oh God, need more power.
Yeah, need more electricity.
Quit using AI. This will update in just a second. And 1, 2, 3. It's really crunching the data here. 20-something years. There it goes. Updated successfully. 84.68% of the time this works.
Good stuff. You could take that to the bank.
The last 25 years right there. 26, almost 26 years now. 85% of the time. And that's just one ticker right there. It works the same on QQQ. Works the same on IWM. Works the same on the Mag 7s, even though Mag 7s don't have daily options, but SPY does. SPY has 0 days. QQQ has 0 days. IWM has 0 days. All of these just freaking work. Updating the report. 82% of the time since July on IWM. There's one that failed. The one before it worked. And then QQQ right here. Now, the difficulty here is like, how do you pick an option, right? How do you know what to play? Well, I coded that all into an algorithm that picks it out for you. Picks out a 0-day option play to take advantage of these moves.
That's awesome, dude. It picks everything.
It picks it out, picks out the strike, picks out the option, and gives it to you in an alert. It says, hey, buy this call.
So how do I get that?
Yeah, does anybody in the chat want to know more about this
Yeah.
right here? Anybody in the chat interested so far in
You
this
got
awesome
a
strategy?
program picking the option for you. Yeah, I want to know about it. I want it. I don't really know. I just want it. If it's doing the
Just
dirty
want
work
it.
for me, yeah.
Well, let me show you an alert, and then I'll show you more about it. We'll show you an alert, fresh alert. This was, here's an entry and an exit right here. So this trade's done. This was from today, right here. Picked out, it told you the entry, the target, the stop of that alert, and then it suggested you look at the October 1st, 2025, 242 call, and it hit the target and suggests that you close out any options you played right there. And that one lasted Gosh, got in at 9:30 right after market open and closed out at 11:40 right there.
That's pretty sweet.
So if you're interested in this sort of thing, this is day trading. But here in the next couple of weeks, we're probably going to have a $2,000 day trade margin requirement. So be a moot point as far as needing 25K or anything like that. But right now you can do it in a cash account. So